Well, hello, Ross. Thank you for joining us. This is Ross Blankenship of Angel Kings joining us today on Investor Connect. Ross, thank you for having us here.
Hey, Hall, thanks for having me. I'm really excited to be here and share some ideas and get some insight back and forth with you.
Well, great, great. Well, looking at your profile, it looks like you have a tremendous amount of experience with both at the angel level and also at the venture capital level in the area of biotech. Can you tell us more about your background and also about your fund?
Yeah, absolutely. So the reason I'm sort of a dual-sided coin. I started out as an entrepreneur when I was 19, built a company. I'd attended. I'm originally from Texas. I grew up in a little town called Texarkana, Texas, which I know many of their Texas listeners know where that is on the border there of Arkansas. But then I went off to school, went off to Cornell University up in Ithaca, New York, and uh, lost a little bit of my accent, but my heart's still definitely in Texas. So I was up at Cornell, and I started my own first company. I was around 19, 20 in that age range. Sort of always been an entrepreneur, had the fire and the drive to build something and make a profit, and in doing, hopefully help the community. And so from the age of 19 on until about 25 or so, when I went to law school, I kept not wanting to do exactly what I was there studying. I did the opposite. So I didn't become a lawyer, but I'm an attorney by trade, I guess, by training rather. And so I've always started companies, had this fire, this desire to be part of this entrepreneurial community. But essentially, from that age of sort of Cornell, then WashU Law, where I then went off and have built great companies. My experience actually was not, in any sense of the word, other than having a father as a physician, was not at all in biotech. I was sort of an average bio student, and that's an exaggeration. But I became very, very interested in biotech once I moved up to Washington, D.C., where I was not too far, and the Angel Kings headquarters wasn't too far away from NIH, which is the National Institute of Health, and which is near Rockville. It's outside of DC in the Beltway. And I started to meet with many scientists, many who were doing immunotherapy, CAR T, as well as drug discovery, and many of the fascinating opportunities that I'm starting to see. And it was just one of these things. I had a sort of hallelujah coffee moment with one scientist I met because I'm so curious about the future of biotechnology. And he was telling me a little bit about this sort of customized medicine, which was immunotherapy, and how we could target individual tumors. I had a family member who had passed away from a large brain tumor, and I sort of listened to him, and it was almost like I almost dropped my phone on the ground and said, this is what I have to do. I mean, this is the future, taking different drugs and taking different therapies and customizing it for people, specifically people that are suffering. It was just one of these no-brainers. No pun intended. I mean, I was so fascinated with it. So it just started out as just a conversation, just like this, Hall, where I felt like, wow, I got to be part of this. And that was about 4 or 5 years ago. And Angel Kings, which is an investment group, where even though our name is Angel, we typically do Series A, some late stage or seed rounds, but we do a lot of Series A, B, C. That takes, Angel Kings has been part of, the FDA discovery process, and that takes a long time. So we're here to support entrepreneurs in the biotechnology process, and that's what we're focused on now.
Well, that's great. It's certainly the age of life science and biotech certainly is in a expansive stage, and there's many great things going on there. Just to back up for a moment, in your experience, I see you actually worked for the SEC for a
Mm-hmm.
while. How did that experience inform your investing thesis and your work with angels and so forth?
Well, it gave me the financial backbone. And that was during law school. Had the wonderful opportunity to work in the enforcement division for the SEC. We were based out of Salt Lake City, so I've been in many cities. And I'll tell you this much: that gave me the financial understanding, the prowess to do the due diligence on many of these startups. As you know, investing in startups isn't just about shaking a hand and getting a good feeling, or it should not be. I argue. And I've written about that extensively, how it has to be not necessarily a formula, but it has to have some objective measures. But working for the SEC, I could take, what I would see in enforcement division, which were many schemes across the country where people were being pushed this idea or that idea, and I could say, well, show me the numbers. And the numbers don't lie. right? I mean, money coming from point A to point B to point C. You can follow the money trail and you can understand how money works. And that gave me the real, I don't know if the right word is rudimentary, but the fundamental understanding of math and numbers that I now can apply towards the startups that we do our due diligence on.
Well, that's a great lesson for everyone. Follow the money and also look at the numbers as opposed to
Mm-hmm.
just the story that goes into it. And then it sounds like you've gone through several iterations with your funding program,
Oh, absolutely.
Angel List, and then Biotech Fund. Can you tell us
Mm-hmm.
how you started and
Yeah.
what was your first fund and how did that go?
Yeah, so it actually did start. I mean, I was part of my brother and I, who my brother's an attorney down, and he's down in Houston at a firm called Lock Lord, and he's been a big part of helping me put all of our VC funds together. But we started the idea back in 2012, 2013-ish, where we said, why don't we start to put 25K checks, 50K checks into startups? And it was some of the startups we first got were through Angel List. I mean, that was no doubt. They were, I'd see some of the profiles posted there, and we got lucky with a few of them that we saw there. But that was just the beginning. I mean, I used the startups I discovered there. And then as I started to move along, I then broke off of Angel List, which I think at this point, with your social networks, with Instagram, with LinkedIn, with Facebook, all the different social media, I think it's fine to. I don't think Angel List should be the end all and be all. I really, to be honest with you, haven't had the best. I had to break off for a number of reasons I can go into later, but I think it's important for people to find their own voice through other social media channels to become VCs, right? So the initial investments were 25, 50K checks that were targeted towards. It wasn't a specific motif. It wasn't biotech in 2012 that I was looking at. It was just companies that kicked ass, that were there, that I could see the financials. I could meet with some of the founders, interview the founders, get to know the people, the process, the product of what they were building. And that was the initial thing. However, as 2012 rolled into 2013, 14, 15, I started to realize I got to be a bit more focused here, right? Because if I've got, in myself, just to give you a little background, we've got about 10 or so people that are running our VC fund. I'm the general partner. We have several LPs across the country, limited partners. And basically, because we're still what would be considered a small venture capital firm, not like Sequoia or Andreessen Horowitz, et cetera, Kleiner Perkins, we had to be very lean and agile as a VC firm. So I essentially, knowing that, had to start to focus more. And so I couldn't be in 100 different places at one time. So that also was part of why I started to focus on biotech. It started out, though, just through Angel List, but I broke free from that, and I think everyone should, to be honest with you. I think now's the time you can build your own voice in other channels.
Seems like venture capital funding is spreading out to more and more groups. I read a stat the other day. There's 3,000 micro VC funds out there today, $25, $50 million funds that are available, and it seems like there's just many, many more options than there ever was before.
Absolutely.
How does an entrepreneur deal with all those options there?
Well, I'll tell you this, but the number one rule of entrepreneurs who are looking to raise money is don't raise money unless you absolutely need to. Okay? Never raise money unless you need to. And I say number two, the second rule is don't raise money unless you're ready to grow. I think raising money should be a delicate process, one in which you seriously reach into your soul, find that absolute number one reason why you're raising money. And the reason I say that is because bringing on partners is a big deal. And you have to be very selective. And I know entrepreneurs are like, oh, I just want to bring in any money I can, anybody who cuts me a check. But it can really come back to bite you in the ass. And you have to be careful with not only how much you're raising, but who you're raising money from. So because when they write you a check and they become part of your ledger and they become part of your capital structure, that's a big deal. And so I think if you're an entrepreneur out there, and maybe that's what the question was geared towards, I think it's about raising money, and you'll have these micro funds, you've got Angel, you've got all these different platforms. But we at Angel Kings, which is my firm, tell entrepreneurs we obviously have to turn down quite a few of entrepreneurs every year because we get pitched all the time, like thousands. But I'll tell you this much. I would say step back before you try to raise, and don't raise until you absolutely need to.
So from your point of view, when you see a deal, what are you looking for in that deal? You're in the biotech space, which has
Yeah.
um, not usually the usual metrics of revenue and traction and month-over-month growth rates in most cases. How do you evaluate these deals and decide which one is worth pursuing and which one is not going to fit your criteria?
Well, and so here's the thing. I use what's called, and I call it, and I've written about this in a book I wrote called Kings Over Aces, and it's called Blankenship's Formula. I had to put some name on it, and Blankenship's a long name, so there you go. But in this particular formula, I've got people, process, product, traction, and financials. People, process, product, traction, and financials. Those are my 5 metrics. And so essentially, I score the people, who the founders are, what they're doing, what are their backgrounds, et cetera. The product, how does it work? What is its efficacy? What's its track record? Do they have customers, et cetera? And I'll get to the biotech in a second. And then in terms of the process, how do they deliver it to consumers or businesses if they're enterprise? Traction, what are the traction? What are the monthly active users if they're a social media company? Or what are their daily active subscribers, et cetera? Then you go to the last part, which are financials. Show me the numbers. Show me the math. Let me look at your PLs, your profit loss. Let me look at your balance sheet, your income statements. I use that the Blankenship formula in every single startup, whether or not they're biotech or more companies that you guys might see through Investor Connect. So now that's been my core since day one. I had to have some objective measure, just like when you're buying a house on one street, you want to compare it objectively to the next door neighbor and what that value of the house is. I've always used that Blankenship formula on every single startup, and I think every single one of the investors who are listening to this show should too. Now, when you apply it to biotech, clearly there's some differences here, right? I mean, you don't necessarily have daily active users. You might have people that are using a prescription drug for their illness or diabetes or whatever type of element that they might have. However, the fundamentals are still there, and so I still use part of it. But for example, if I'm thinking about investing in a drug discovery platform, for example, Alzheimer's or Parkinson's, which is a huge thing I'm looking for, and I would love to have some of your listeners who are interested in brain health, sciences, life sciences to send me and pitch me all day. I love it. But I still use the process there, right? So I still look at the people. Are they scientists? Do they have the education background? Do they have have they done research in science and lived in the trenches doing these biomedical research? I still use some of that, but it is slightly different. So whatever you do, though, here's the takeaway from that. Have your own metrics, have your own formula, and try to compare apples to apples. I know startups are different from one to another, but try to use something objective, or else you'll get caught up in, they look sharp, they're dressed sharp, or they're nice to me. No, forget about that. You need something objective to compare one to the next.
Well, it's certainly a challenge in funding these biotech deals, given the cost or the total cost of bringing a drug or therapeutic to the marketplace. What do you tell people about that? We're starting it off and getting them going and helping them grow, but some of these are $500 million or more dollars from start to finish. How do you coach entrepreneurs on that discussion point?
Well, on the biotech side, if you're talking to both the entrepreneurs, you've got your entrepreneurs who are launching the immunotherapy, they're launching the CAR T, they're launching the drug discovery. They already know the process, right? They know that the FDA approval process takes years. It's getting a little bit better now that Gottlieb, who's the head of the FDA, is in there, and he's approving more drugs. He's making generic drugs more available to consumers. I love that. I love the free market side of what's going on with the FDA. But the entrepreneurs already know the process is lengthy and tedious. I think it's on the investor side that you have to reiterate that, hey, when you invest through Angel Kings, our VC firm, into some of these drug discovery platforms, et cetera, it's going to take a while. I mean, it could be 5 to 10 years. And if you're not upfront with your investors, I think that's doing them a disservice. However, I will say that the turnaround, I mean, we've seen some companies through our fund be acquired by some of the big ones, Pfizer, AstraZeneca, GSK, GlaxoSmithKline, within a year of launching, just because of the team, just because of the scientists who are on their team. And they said, we got to have those guys as part of our drug discovery platform here at GSK or here at AstraZeneca or here at Pfizer. And so it's interesting, if you approach it investing in the startups, biotech startups, and you get the right team, sometimes they'll get acquired way before the FDA process even happens. But whatever it is, you have to tell your investors and the entrepreneurs, remind them of the patience, because typically it does take a while. However, the returns are exponential. I mean, they're massive.
Well, it seems like it's true across the board of all kinds of investing that it always starts and ends with the team, and the team is the most important factor. And it sounds like in this case that if you get the right team, you can actually sell your business as an acqui-hire. They're hiring the team as much as they're hiring the product or the technology that's behind it. How often do you see that happening?
Well, I would say if in the startups we've looked at, it could be 20 to 30% of the time if we find the right team. And here's the cool thing: the difference between an acqui-hire and a typical tech acquisition is that they'll get hired, they might get $1 million in stock earned out over 4 years. That's how a lot of acqui-hires happen. And so that stock may or may not be worth something because the parent company that's acquiring the acquisitionee, that smaller company may not ever become big. In biotech, it's a lot different. I mean, I would argue that it's even much, much greater in that the people that are acqui-hired, the scientists, the lab scientists, the researchers who get acqui-hired part of the drug discovery team, that they join, for example, GSK, Pfizer, Allergan, whatever company that's worth hundreds of billions of dollars, that not only will they get stock in a company that's totally proven and bigger than most tech companies that you can think of. Not only that, but they also get royalties, and that's where it gets big, right? If you're smart, have a legal and financial background, I will tell these guys, you cannot, if they're about to be acquired, you cannot just take stock. You should take royalties on your drug. And that's where it becomes big daddy. That's where it becomes next level stuff. And we've seen that at Angel Kings several times.
I
And
see.
it can be much, much greater. And that was part of the attraction to why I became interested in this space of biotech.
Oh, that's a game changer if you can get the royalties on it.
Oh,
Um,
it's epic. I mean, yeah, it's hard to measure.
But most entrepreneurs when they pitch their business, it starts with the product and they talk about the product and they end with the product, and then the team and everything else is a footnote at the end of the slide deck, and it's all about the product and the technology, a little bit about the market size because there's so much good data available on how many people have a condition and the rates of change, and it just seems like it's a very well defined space that people get their hands on pretty good data pretty easily. But it sounds
Mhm.
like you're saying they should be pitching the team and what the team can do and why someone would want to buy the team as opposed to the product, which of course is a corollary to the team.
Well, I teach in my formula, in Blankenship's formula, Kings over Aces, I say, look, 40% of the 100% formula is based off the team, meaning 4 out of 10 of the points that we measure is just who they are. Because at the end of the day, behind a corporate entity, behind a C Corp, an LLC, whatever structure you want to put your company together, they're only people. And without people, without the right people who are ready to grind, ready to fight, ready to win at all costs, you will lose. Your investors will lose, the entrepreneurs will lose because they're losers. So you have to pitch the team in terms of how they've dealt with the adversity. Now, let me be very clear. If for example, Peter Thiel had seen Zuckerberg and said, "Oh, you haven't started 10 startups before, so I'm not going to invest in you," he would have lost big time in his $500,000 check to Mark Zuckerberg, right? But so you can't. There is a balance here where you can't always just evaluate it based off their experience. I look at it as not just an experiential thing where you say, "Oh, he's done 10 startups." I want to interview the founders. I want to interview them and say, "Talk to me about your adversity." I mean, in Texas, which is I'm lucky enough to be from. I've got farmers and ranchers, kids that go to UT Austin, go to Texas State, even. I mean, wherever, UT Austin, UT Arlington, and Dallas. I mean, I've got guys there that I've seen that kick ass over Ivy League 10x founders all day. All right. I mean, but it is still about the team. It's about adversity. It's about interviewing the founders and knowing how hard they're willing to fight for it. And so that's what I look for. Not necessarily, what school they went to or how many startups they founded, because you can lose out by measuring that, right? You have to have something greater. And that's what I call this the X factor in investing, is finding somebody who's fought through, had adversity, or been there before, but not necessarily because they've started 10 startups before. Does
Well, that
that make
makes
sense?
sense. That makes sense. To switch gears a little bit, tell us a little bit more about your biotech venture fund. what
Yeah.
you look for, and how should entrepreneurs approach you for the deal flow process? What's the best way to get in touch, and what do they need to be showing you in addition to the team to go get on your radar?
Well, first of all, I love getting pitched. I love hearing. I listen to everybody. I see everything that comes through. The best way to pitch me, you can go to our website, angelkings.com. That's ANGELKINGS.com. Angelkings.com. There's a place where you can submit your startups, background, all that stuff. So definitely check that out. The other thing is through LinkedIn. My name is Ross Blankenship. There's not too many of me out there. You can send me a message through LinkedIn, Ross Blankenship. But here's what I want to see. Instead of the sort of, hey, we're looking to raise this amount of money and blah, 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 what I want to hear is your background, your story, where you come from, and tell me why it is something special about your product. And I would love, I typically, if I like just generally what I see on paper, I'll spend 10, 15 minutes getting to know somebody. If it works, it works. If not, I move on. So definitely go to our website or pitch me through LinkedIn. I'm open to either.
That sounds great. That sounds great. How many deals a year do you see through that fund?
We only do about six to eight deals a year, so one every 2 months. We're very selective. I mean, just as everybody should be, and I know you are too. But yeah, we only do about 6 to 8 a year, and we get about 2,500 to 3,000 pitches a year.
Wow, that's quite a bit. So you used to be on an angel list, and then you graduated out of that into your own program. It sounds like you built your own syndicate network. Is that right? And how did that go?
Yeah. Well, so first off, and I've been the angel list thing for me. I'm kind of over it. I just don't think that the support's there that is necessary to support a VC firm or support an angel group. That whether you're in Texas or whether you're in California, wherever you are, it doesn't matter. I think angel list is not really focused on supporting investors the way they need to. So when we broke free from angel list, I use the word broke free, unfettered. We decided to just put together our core knowledge base of biotech guys. We had, all sorts of SaaS enterprise people together. And now, even though we're in about 5 different industries, our backgrounds, and almost 100 investors, what we do now is we take all that brain power and put it together, and we invest roughly about between $50,000 to $250,000 upwards, maybe even 500, depending on the startup, in a round. And now we're kicking butt. I mean, we've got people pitching us now that are startups that are raising money from big VC firms, even though we're still not by any means the big VC fund on the block. So it's a really exciting time at Angel Kings. We love connecting to investors, and I think your network, Hall T, that you've built is awesome as well. We'd love to be part of making that grow as well.
Well, certainly there's no angel network in Texas that's focused on the biotech space, and there's certainly a need here, especially out of the Houston group. They've got quite a bit going on with TMC and with all of the MD Anderson, Baylor College of Medicine. There's a tremendous amount of innovation and research going in at that space, and so certainly we'd love to work with you guys here in Texas, and it sounds like you're across the country as well. But want to appreciate your taking time and talking with us today. Is there anything else we didn't cover up front here? Love to have you come back and talk about other topics in more detail, like the funding strategies and so forth. What else would you like to add before we wrap it up?
Well, I'll be down in Houston and Dallas. I go down about once a month, just kind of a meeting with a bunch of awesome investors and also entrepreneurs. So if your listeners are down there in either of those areas, make sure you can also send me an email, CEO@angelkings.com. I'm happy to meet with you. No, I think that was great, and hopefully this was helpful information for your listeners.
It is, and we'll put in the show notes how to get in touch with you through your LinkedIn profile, and we'll be back in touch to set up a follow-up interview to go into more depth on the next round. But appreciate you taking time today.
Awesome. Well, have a great day, and we'll look forward to talking to you again.
Thank you.
All right. Bye-bye.